Before starting the video, click the subscribe button and turn on the notification bell. Hello and welcome to House of Commerce. Hope you all are doing well. So today we are going to discuss about intangible assets IAS 38, and today's lecture content is what is intangible, how to calculate the amortization on intangible, and how to calculate the life of an intangible asset. So stay tuned, watch the video till end to know the complete lecture about intangibles. An intangible asset is an identifiable non-monetary item without physical substance, which is within the control of the entity and is capable of generating the future economic benefits for the entity. So what is identifiable? We all know that we can identify the asset that it carries this and that amount. But what does it mean by non-monetary? So non-monetary means that it is not generating or producing anything which can be sold, but it is generating some of the amount to the entity. For example, if an entity has a goodwill in the market, and by that name entity has got the customers, so this means that asset is giving benefit but not monetary benefits, as it is not producing anything. So let's take a look on the other sides of the intangible. Recognition and initial measurement. An intangible shall be recognized if and only if it is probable that future economic benefits that are attributable to the asset will flow to the entity, and the cost of the asset can be measured reliably. Now, what is meant by it is probable? So probable means that there are 25 to 50% chances that an asset will get the future economic benefits to the entity, and the cost of the asset is reliably measurable. So reliably measurable means that in how much cost will the asset be produced. Then an asset shall assess the probability of expected future economic benefits using reasonable and supportable assumptions that represents management's best estimate of the set of economic conditions that will exist over the useful life of the asset. So what and how much amount shall asset bring to the entity should be reliably measurable, and it is upon the best estimate. The company can only estimate that how much will be the benefit from this asset and by producing it. And an intangible asset shall be measured initially at cost. So whatever expenditures are incurred, that shall be the cost of the asset. Separate acquisition. The cost of separately acquired intangible asset can usually be measured reliably. This is when the purchase consideration is in the form of cash or other monetary asset. For example, if the entity cost along with its building $1 million and it charges $1.2 million just because of its name, that it is running a successful business and it is charging because of its name, so that $0.2 million shall be the charge of the asset of goodwill. So therefore we shall calculate the goodwill by $0.2 million, as the purchase consideration is paid $0.2 million for its goodwill. Then the cost of separately acquired intangible asset comprises its purchase price, including import duties and non-refundable purchase taxes, after deducting trade discount and rebates, and any directly attributable cost of preparing asset for its intended use. Now, what are directly attributable cost? Cost of employees' benefits. Each and every benefit you are paying to the employees shall be the directly attributable expense that you have incurred on asset. then professional fee arising directly from bringing the asset to its working conditions. So we have studied in the previous lectures as well that professional fee shall be added in the cost of the asset, because without support of a professional you cannot operate your asset. Then cost of testing whether the asset is functioning properly or not. So test run cost shall also be the part of the cost of asset, because without test run you cannot operate the asset properly. Subsequent expenditure on an acquired in-process research and development project. Now the question is, what is research and development? Means the research or development done due to producing any of the intangible. So whatever the cost incurred on research or development phase shall be the part of cost of intangible asset. So research or development expenditure that relates to an in-process research or development project acquired separately or in a business combination and recognized as an intangible asset. So whatever the project is acquired separately or in the business combination from any of the other partnership business shall be recognized as an intangible asset, or is incurred after the acquisition of the project shall be accounted for in terms of this standard. And after purchasing that project, if you incur any of the expenditure in research or development phase to extend that asset or to maintain it to work efficiently, so whatever the expenditures are incurred to maintain the asset, intangible asset, shall be the part of cost of intangible asset. Then how to calculate the cost of the asset which is taken in exchange of any other asset. Intangible asset may be acquired in exchange of a non-monetary asset or asset. The cost is measured at fair value. What if the acquired asset, the exchanged asset, has no monetary value? So all we have to do to measure the cost is to write the carrying amount of the same asset given up in exchange of this asset. So that shall be accounted for as the cost of this asset. Now, if the intangible asset acquired in a business combination, means if you have combined your business with any other, so how will you calculate the intangible asset? If an intangible asset acquired in a business combination is separable or arises from contractual or other legal rights, sufficient information exists to measure reliably the fair value of the asset. So all you have to do is to measure the fair value of the asset, and whatever the fair value of the asset, whatever the running value or the market prevailing value is, shall be the value of the asset acquired in the business combination. If the intangible asset is taken in the government grant, so how will you calculate the cost? So it shall be recognized at fair value or normal value plus direct expenses to prepare for use. So whatever charges you have paid to prepare it for use shall be added into the initial price you have paid to the government, and then it shall be the total cost of the intangible asset. Important to note is internally generated goodwill shall not be recognized as an asset. What does it mean that you do not have to recognize the internally generated goodwill? So whatever name you have in the market, you shall not classify it as an asset in your books. So if you have acquired any of the asset from outside and that asset has some goodwill, so you shall record the goodwill in your books. But if you have your own generated asset and that has some goodwill in the market, or your own name has some goodwill in the market, so you shall not record it as a goodwill in your books as an asset in your books. So this means that internally generated goodwill shall not be recognized as an asset. So internally generated intangible assets. There are two phases to complete an intangible asset. One is research phase and the other one is development phase. So you have to know this thing, that research phase expenditure shall not be charged to the cost of asset, but development phase, all the expenditures will be accounted for as a cost of asset. But if the asset fulfills the following conditions: the technical feasibility of completing the asset, that it is feasible that asset shall be completed, then the development cost shall be accounted for as the cost of intangible. Then its intention to complete and use or sell the asset. So if the company is intended to sell or use the asset, then the development expenditure shall be charged to the cost. Its ability to use or sell the asset. If the company is not capable of using the same asset which it is producing, or it has the capability of selling the asset, then it shall charge the development expenditure to the cost of the asset. How the asset will generate the future economic benefits. If the company has no idea that how the asset shall generate the future economic benefits, then the development cost shall not be accounted for as cost of intangibles. The availability of sufficient resources to complete the development and sell the asset. So if there are no sufficient resources to complete the asset, then the development cost shall be accounted for as no cost in the cost of intangibles. So then the last, the ability to measure reliably the expenditures incurred on the asset during its development. So whatever the expenditures on development phase are being expended, that should be measured reliably, otherwise the estimated cost cannot be the part of cost of intangible assets. Then internally generated brands, publishing titles, customers list, and items similar in substance shall not be recognized as intangible assets. So we have studied before that internally generated intangible assets shall not be recognized in the books of accounts. Measurement after recognition. An entity shall choose either the cost model or revaluation model as its accounting policy. If an intangible asset is accounted for using the revaluation model, all the other assets in its class shall also be accounted for using the same model, unless there is no active market for those assets. So what is revaluation model and what is cost model? We have discussed it in one of our lecture, but if you want to know again, so we shall revise it, that cost model is that company accounts for the assets on its cost less whatever the depreciation is. And revaluation model means that the company revalue or compares its assets cost than the market value. So it can be more than the actual cost or it can be less than the actual cost, and the company shall account for the asset in its book on the same value which is prevailing in the market. So while using the cost model, what will company do? After initial recognition, an intangible asset shall be carried at its cost less any accumulated amortization and any accumulated impairment losses. So what is amortization? Amortization means that the decline in the value of intangible assets, as decline in the value of tangible asset means depreciation. So decline in the value of intangible asset means amortization. And impairment loss means that your fair value declines the market prevailing value. So you account for as an impairment loss. Revaluation model. Now what is revaluation model? That after initial recognition at the cost of the asset, what will the company do? Company shall compare it with the fair value prevailing in the market. So it can be more than the actual cost or it can be less than. If it is more than so that the company shall recognize it as a revaluation surplus, and if it is less than the actual cost, so company shall recognize it as a revaluation downwards. So in this way the company shall compare it with the market value, and then it shall recognize it in its books if it wants to opt the revaluation model. So whatever the price is prevailing in the market, the asset shall be recorded by the same value in the books of the company. Now the important points to notice: how to record the revaluation. So if the revaluation is increased than the cost of the asset, so you can record it into the other comprehensive income as an income, as a revaluation surplus, or you can decrease the previously written down value of the revaluation. For example, if the previous asset was revalued, if the same asset was revalued before and it was revalued downwards, so either you can record it as an income in other comprehensive income, or you can reverse the same downward revaluation with the upward revaluation. Then if the revaluation decreases, so what will you do? You can decline it or you can reduce it from the other comprehensive income, or you can reduce the revaluation surplus recorded on the same asset before. So these are the both treatments which you can do with the revaluation. So for calculating the amortization, you must know about the life of an intangible asset. So how to calculate the life of an intangible asset is a question. If you do not know that how much cash flow shall the intangible asset generate to the entity, so it is said to be an infinite life of the same intangible asset. Then if the asset is acquired on contractual rights, so whatever the term of contract is, the asset shall have the same life as the contractual life has. If number third, if the asset is reacquired on a contractual term, so whatever the remaining term of the contract is, the asset shall have the same useful life. So these are 3 paragraphs and these are explained step by step. How to charge the amortization on an intangible asset. So for charging the intangible assets amortization, it shall be allocated on a systematic basis over its useful life. So how to calculate the useful life is discussed before. So amortization shall cease, number second, amortization shall cease earlier at the date when the asset is held for sale. So no amortization shall be charged on the asset held for sale. Then if no pattern is selected that how to calculate the amortization, then it shall be amortized on using the straight line method. Now what is the straight line method? We have discussed it while discussing the depreciation. You can go there and you can see the methods of charging the depreciation, but let us discuss it again. In a straight line method, you charge the depreciation by dividing the cost with the total useful life of the asset. So in the same way, you will charge the amortization if no pattern is selected to charge the amortization. Now the question is that what shall be the residual value while charging the amortization under a straight line method. So first of all, it shall be assumed as 0 unless there is a third party willing to purchase the asset at the end of total useful life of the asset. So if it is available, the third party is available to buy the asset at the end of total useful life, then the salvage value or residual value shall be considered as the same value which the third party is offering to purchase the asset at the end of total useful life of the asset. Then if the market value is available for as the reference to determine the price of the asset at the end of total useful life, and it is probable that it shall be sold at certain value at the end of the total useful life in the market, so that shall be assumed as residual value of the same intangible asset. So retirement and disposals. An intangible asset shall be derecognized on disposal or when no future benefits are expected to be from the disposal or use of the asset. So the gain arising from derecognition of intangible asset shall be determined as the difference between the net disposal proceeds or and the carrying amount of the asset. It shall be recognized in the profit and loss when asset is derecognized, and the gain shall not be a revenue. It shall only be considered as a gain on disposal of intangible asset and not as a revenue. Now that's all for today's lecture. If you have any question regarding today's lecture, you can put your question into the comment section and that shall be answered into the next videos. Till then, good luck.